Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the Empire Fintech Conference in New York City. Joining me for this segment, I have Abdul Abdirahman. He is investor at FPrime Capital, and we're going to discuss an index for the fintech space. Abdul, it's great to have you with us. Welcome to TradeTalks.
Thank you for having me, Jill.
Tell us about the FPrime Fintech Index and why your firm launched it.
Yeah, so we've been investing in the fintech space for quite a bit of time over the last decade or so, and we've always looked for ways to capture insights from what's happening in the ecosystem, especially as fintech has become more prominent. We launched the Fintech Index a couple years ago because we saw a large number of companies going public. We also wanted to capture some nuanced insights and share with everyone in the ecosystem, whether they were investors, entrepreneurs, operators, and just share some of those insights with them.
What are some of those insights?
Yeah, so there's a couple areas. Maybe I'll tell you a little bit about the index itself. So the index is about 55 companies that are publicly listed, and they span kind of all the different categories in fintech, ranging from payments, banking, wealth management, insurance, prop tech, even some B2B SaaS companies that are selling in the fintech ecosystem. And they're very disruptive companies that have gone public over the last kind of decade or so. And we wanted to capture some of the insights about the companies, whether regarding their multiples, how they're performing in public markets, how they're growing. And so we created a website called FPrime Fintech Index, where you can capture a lot of these insights, and released a few reports. In terms of the key insights, there's a few. On the performance side, what we've seen is in 2020, a lot of the fintech companies that went public were performing really well. The fintech index grew from 250 billion market cap all the way to 1.3 trillion in 2021. Obviously, things corrected in 2022, so it was a sobering year for a lot of folks in the fintech ecosystem. And you saw some of that also ripple into what's happening in private markets, especially for late-stage growth equity side. And then now it's starting to happen a little bit into kind of the earliest stages with seed, pre, and Series A also getting impacted. From a market cap perspective, we've seen the companies grow. Even in the last quarter, we've seen companies add back about 70 billion in market cap. And then there's interesting insights around nuanced metrics around different categories. So we released some vertical specific benchmarks as well.
What about revenue multiples? Have they recovered during the quarter as well?
Yes. So there's been so revenue multiples historically have been around 8 to 10. And then in 2021 we saw this amazing thing happen where fintech multiples were in the 20 range, above some as high as 25, 40. And these are public multiples, so you can imagine what it was in private markets. However, now average multiples have actually declined down to 4x, and there's been a slight bump up in Q1. So we've seen companies, multiples come back up, but there is a bifurcation between growth rates and also profitability is becoming more important for investors. So you're seeing some of the companies that are growing over 40% but are unprofitable actually for the first time in the last 3 years, having a lower multiple than companies that are more stable, growing 20 to 40% but are profitable.
Right.
And then companies that are growing less than 20% have kind of, their multiples have continued to decline even in the first quarter of this year.
That's reflective of what's happening in the public and private markets. And honestly, this valuation reset, it had to come back down to earth.
Yes.
Profitability, balance sheets, management, governance, it does matter.
Exactly.
You released some sub-sector specific benchmarks earlier this year. Tell us more about that.
Yeah, so fintech is very broad. You have companies in the prop tech space who have really interesting business models. You have insurers, that have a very different business model than payments, than wealth managers and banks. And so we wanted to capture some of the nuanced insights around what should someone who's building in the fintech ecosystem, maybe building a payments company, what should they really care about? What are the metrics that they should be, comparing themselves to? So we released these benchmarks, for example, in the payment space, we released benchmarks that capture total payment volume, take rates, which are really critical, both gross and net take rates. And some of the key takeaways maybe on the payment side is we saw payment providers that are going after SMBs actually having really high take rates, up to 760 bibs. If you look at companies like Mercado Libre or and others in the TAM ecosystem, but even companies like our portfolio company Toast are able to get a higher take rate than some of the incumbents such as Adyen and PayPal as an example.
So it's interesting, payment disruptors. actually have higher take rates than the incumbents.
Yes.
Was that something that you expected? Or?
I mean, it makes sense if you think about it. Like, some of the established payment companies are selling to large established enterprises, and so they have those enterprises have very strong negotiation power relative, to a startup that Stripe might be selling to, or Adyen might, not Adyen, but like some of the other players might be selling to, and so they're able to take a higher take rate. Like, when you look at Toast or Square, it's a lot of mom and pop shops, it's a lot of smaller restaurants, SMB segments, and so they're able to, they also have to offer a lot of services to ensure that their payments, transactions are facilitated, and they offer them a plethora of ways for them to capture payments as well, relative to, an Adyen or a PayPal who's going after an enterprise as well.
What about InsurTech? That seems to be the most complex area of fintech, and perhaps why it's a little bit more slow going.
Yes. So on the InsurTech side, the interesting benchmarks that we wanted to capture were around kind of loss ratios and expense ratios. In many ways, what we saw was that the InsurTech companies, the disruptors, actually, while their total kind of underwritten premiums is very short, small compared to some of the larger established insurers out there, the average policy is actually on par with some of their competitors. But the challenge is their expenses and loss ratios are really high, and so sometimes they're paying out more in claims than they're receiving in premiums. And so that's not a model that works today, but over time they want to improve on those and at some point catch up to some of their incumbent peers.
I mean, of all sectors, insurance certainly needs more efficiency.
Exactly. And we've noticed other sectors like prop tech and wealth management, which have also been hit by some of the cyclical things that are going on with rising rates also. So we wanted to capture some of the nuanced insights around like how are they performing and like should you compare yourself if you're building in that space as well.
All right, appreciate the insight, Abdul. Thanks for joining us on Trade Talks. And thanks for joining me, Jill Malandrino, Global Markets Reporter at Nasdaq.